Keep in mind that the Federal Reserve's mission is clear: increase globalism, widen the wealth gap, and quietly destroy the middle class. Since hijacking the country in 1913, we've wiped out over 99% of the dollar's value. We keep inflation just high enough to rob you, but not high enough for you to riot. Our highest priority is to make sure Donald Trump never fixes what we broke. The truth is, the man can't be bought, and we hate him even more than we hate the rest of you. Hail Hydro.
Friday, June 20th, 2025, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive. I see you have a camera malfunction. That's not a problem. We can still hear you. So how's your week been?
Well, it's getting hotter here. I've spent a lot of time in the garden. The vegetables are growing nicely. And on the camera side, well, I've tried the usual things like plugging it in, unplugging it, restarting the computer. Yeah, nothing works. So I'm going to have to figure that one out, but I can't do it now.
That's not a problem. Yeah, Rudy as well. He's under my feet, underneath the desk, where it's nice and cool. So he doesn't want to be on the sofa because it's getting quite hot here too. 30 degrees, I think it was yesterday for the UK. That's hot. But anyway, today, Clive, I want to start with a topic that I think a lot of people are not looking at because they think inflation's kind of under control, and mainly because they look at the wrong kind of inflation. They look at the consequence of it, the CPI. So what we're going to look at today is that central bankers are adding fuel to the fire with a lot of rate cuts. Yes, the Fed didn't cut rates, but a lot of other central banks are doing so. And I also see, Clive, a money supply explosion dead ahead. And it's nothing new, actually. We've had this money supply explosion for the last 50 years. But before we go further into this, just wanted to make a couple of announcements. And I'm going to share a page here. Dirty Man Safe, Clive, they've provided me with a landing page now. So if you go in the description of all my new videos, there's a new landing page for Dirty Man Safe. You still get the 10% off. So yes, store your valuables like sporting goods, precious metals, cash, jewelry, etc. And Clive, I'm hearing so much. I saw a movie yesterday, or a documentary. I haven't finished it. It was sent to me by one of the viewers, called The Agenda. And it's nothing surprising to me, but it's scary that the powers that be don't want you to have anything. So I think it's more important than ever to think about a Dirty Man Safe. The other thing I wanted to talk about, what is it? Oh yeah, it's the Rudy collection. You can see that the website is ready, but we're experimenting. We're doing a trial. I've ordered something to see if it works. It has worked, and we're gonna have a few other people do the trial, and hopefully by next week we'll get the green light for the Rudy collection. Yeah, Clive, so maybe you can start talking about the central banks, because we saw a lot of cuts, especially from your central bank, or the central bank in Switzerland.
Well, yes. I mean, the news yesterday was the Swiss National Bank reduced the rate of interest from 0.25% down to 0%, and it's widely expected that they will go negative by this autumn. Now, the reason they're doing that is the amazing strength of the Swiss franc. It's one of the few governments which don't run huge deficits, or any deficits, and money is pouring into Switzerland. And that's obviously not good for Swiss exports. So to try and help the Swiss, or stop the Swiss franc from rising, they're reducing the rates. And if they go negative, of course, that would maybe help money leave Switzerland because nobody likes to have less money. I remember last time we were at negative rates. People I was actually working as a banker, as a private banker then, and we had clients who were ringing up and saying, Clive, I put my money on deposit with you. Why are you charging me money to to look after my money. But we had no choice because at the end of the day, that money had to be placed on what's called fiduciary deposit, and you placed it on deposit at the best rate you could get globally with other banks. And those banks were all paying a negative rate on Swiss francs, and you had to pass that on to the customer with your commission on top. If we go negative again, which I think we will in the autumn, it will drive some money out of Switzerland, or maybe drive some money into other assets like gold or equities.
Yeah, and you said that one of the reasons the S&B cuts rates, and a lot of these Keynesian politicians, they, not politicians, economists, they think that a weaker currency is better for exports, and that could be so, but it's also worse for imports, and a lot of the Swiss let's say, finished goods, they need to import raw materials. So, yeah, I kind of see the point here. But it's ironic, though, that yeah, the Swiss franc is strong, but it's the best of a bad bunch because it's still dropping quite precipitously versus gold. But what I wanted to go through now, Clive, is money supply figures. And I know the US and the Bank of England haven't cut rates, didn't cut rates lately, but I think they will eventually.
Yeah, the UK is forecast to cut it at the next meeting.
Yeah.
It's an 80, I see that there's an 80% probability that the Bank of England will cut rates at the
Yeah.
next meeting.
So what I wanted to go through here is all this data from Trading Economics, and it's a really good service. I subscribe to it, and that's possible because of you guys supporting the channel, so we can make it better. And yeah, I'd like to thank you for that. So we've got United States Money Supply M2. We are almost at 22 trillion, as you can see here, 21.86. It's higher than it was after that crisis from 2020 to 2022 or thereabouts. And I think it's picking up again, Clive. And this is what really causes rising prices, which people mistake for inflation. And I think, Clive, this is quite quite a warning here, and this is why I focus on this, because you won't hear of this on Bloomberg TV or CNBC or Fox Business. The FT is not going to write about this. The central bankers really they don't target money supply, but you see here that we went parabolic almost here during COVID, and that's why we had prices going up so much. It wasn't because of Russia, it was because of that. And I think like they're going to use the tariffs, the trade war, what's happening in the Middle East now as an excuse. But yeah, I'm just trying to warn you guys, things are going to get worse. The currencies are going to get more and more debased. And look at the euro, Clive, and the ECB's cut rates quite aggressively, and yet their money supply is growing. Yeah, it's growing even more than the American. You look at Switzerland, it's starting to pick up as well. So I think things are not gonna get cheaper in Switzerland. You look at Sweden as well. They cut rates this week. It's still below, I think, the post-COVID like spike, but I think it's only a matter of time. And also Norway, who surprised. Did they really need to create more money by cutting rates? I don't think so. So do you agree with me on that, Clive, or are you?
Yeah, and I think it's going to get worse. We've got what's called the X date. coming up. The X date is the date on which the US Treasury runs out of money, because we also forget they're in a debt ceiling since the 2nd of January this year. So they are currently running down their cash balances and using extraordinary measures, such as not paying money into the pension funds and so forth, to pay the bills. But those extraordinary measures and cash balances are estimated to run out by about 15th of August. Now, that date may move according to tax receipts and other things, but that's the current estimate. It'll run out by 15th of August. What does it mean? It means that the US government ought to raise the debt ceiling before we get to that date so that they can continue to pay their bills and not default. Now, everybody thinks they won't default, so everyone thinks they will raise the debt ceiling. But obviously, when they do raise the debt ceiling, they're going to have to refill the coffers, and that means in very short order, they're going to have to borrow around $1 trillion US. The way I get to that figure is normally the Treasury in normal times has a cash balance of about 800 billion, but of course they've run that down and they're now helping themselves to the pension fund. So when the debt ceiling is raised, they're going to have to get back to that $800 billion of cash to pay the bills, and they'll probably have to put money back, or the money they didn't put into the pension funds, they'll have to put that in as well. So I'm allowing 200 billion for that. So I think they'll borrow in short order $1 trillion. And we mustn't forget that in the current financial year, they've got a pretty huge budget deficit, which is ongoing, of well over $1 trillion, going on $2 trillion, to be funded as well. So when they get to this point of borrowing, we're talking about borrowing something like 7% of the existing debt level, which is quite a high number. My question is, will the market have an appetite for that or not? And I think that given everything which is going on, the appetite will not be at its usual levels, and therefore they will struggle to borrow that at an acceptable rate of interest. Therefore, I expect the central bank, the Federal Reserve, to step in and buy some of those bonds. And when they buy the bonds, they have to electronically print money. Basically, that's the liability, the money they print, and asset is the bond that they buy. So they'll be electronically printing money, pushing money into the system, and thus continuing to increase the money supply. And we all know that where the USA goes, the rest of the world follows. So I think globally, we're going to see quite a spike in money supply going through to the end of this year, and obviously continuing after that next year and beyond.
Clive, yeah, I agree 100%. And people are going to be feeling next year the consequence of that, and the year after. Things are not going to get cheaper. We could be on the cusp of maybe people losing confidence in the whole system, and then you get hyperinflation. But there's a milestone reached here, Clive, in the last 24 hours. Not a good milestone. You see the national debt is gone above 37 trillion. So
I wonder how they get to that, because officially the national debt is supposed to be capped at 36.1 trillion.
yeah,
As of
probably.
the 3rd of January. So I'm not sure if that's a real number.
Yeah, I think is that because of the debt ceiling suspension?
That's right. I mean, maybe
But
when they
they
get to that
ex
number, they
yeah,
might
maybe.
be including what they owe the pension funds, which,
Yeah,
i.e., the money they haven't put into the pension funds, which is
they're
the 200 billion I'm talking about.
yeah, they're extrapolating it, I guess. But yeah, I think anyway, I think it's academic. It's gonna probably, like you said, it's probably gonna be even 38 by the time they sort out the debt ceiling impasse, because, like you said, they have to probably add another trillion, or maybe this is included here, but still not good. And Clive, oh, just another thing I forgot to tell the viewers, later on in this report, Clive is going to talk about an interesting story called Poseidon. It's about investment, isn't it, Clive? So
Yes. So whenever you're ready, I'll start on that one area. But do you
yeah,
want to carry on with other things
yeah,
first?
yeah. Stay tuned for that. It's going to come out. I just wanted to let the people know here that we've had some economic numbers, Clive, this morning, and they're not good. So it's like a stagflationary environment because I saw the Fed, they raised the CPI target that they have for a
Yep,
year hence, and they lowered the growth target. So
that's right. They pushed the CPI target up from 3 points. What was it? Was it 3.7 to no? Yeah,
I think
no, from 2.7 to 3%.
yeah, but and that's there's PCE even, isn't it? But you see here in the UK retail sales dropped by 2.7% month on month. The economy here is not doing well. I think, like you said, the Bank of England is going to have to cut rates soon. Um, what else, Clive? Yeah,
Well, of course, we've got the oil price has
yeah,
surged by 20% in
yeah.
a month.
Yeah, they're going to use that as an excuse when prices start going up. They're going to blame that. They're going to blame the tariffs. But all in all, it's about money printing. Clive, you sent me this chart here. Maybe you want to talk about it. I've just shared it.
So what we're looking at here is the US dollar federal funds rate since 1988. That's 20 something, 30, what was it, nearly 40,
37. Great.
nearly 40 years ago, yeah,
Yeah.
37 years ago. It shows the US federal funds rate. That's the red line. And it also shows the yield on 30-year US Treasuries. And you can see that since 1998, we've had our ups and downs in the short-term rate, but it's been generally trending down at least until the period of 2008 to 2015. And of course, the 30-year Treasury yield was trending down in the same period. And then we had this spike up in 2023 as the Federal Reserve raised the short-term rates to over 5%, 5.5%, 5.75%. And recently, last year, they started the cutting process. But so when they raised the rates, the 30-year yield went up, but when they lowered the rates, the 30-year yield continued to rise. So what we're seeing is a kind of disconnect between the short-term rates now and the 30-year yield, where the 30-year yield is knocking on the highest level for 20, something like 20 odd years. It's as near as makes no difference. And the short-term rates are coming down. They're expected to come down 2 more times this year. And I think this is the whole point about this is what's going to happen when we get to this X date in August and they raise the debt ceiling and they have to borrow all this money and the yields are at that high level. Are they going to just go higher, or is the Federal Reserve going to step in? I think my answer is probably the Federal Reserve.
Yeah, because to me it seems like the trend has been broken from the late 80s, and that now the trend is upwards, and that it's almost like unless they want the long-term yields, the 30-year to keep going up, they need to actually raise rates here, I think, and they can't really cut that much because I think this, like you said, with all the stuff that's coming out about the debt and deficit, this is going to continue to go up, the 30-year yield. So, and I think, Clive, this is a good topic to segue into. I don't know if you've seen this story. This is from the guy who wrote I think, the Black Swan, about the Black Swan, Nassim Taleb. He said this week, gold is now the world's reserve currency, and Trump's tariffs and immigration policy will wreck the boat. He did admit, that the paper dollar, is a good transactional currency, but it's not a good place to park your reserves, i.e., for central banks. So the other thing, Clive, I've noticed at the press conference, Jay Powell kept saying that the Fed's purpose, one of its objectives, is to keep prices stable. But if we look at this chart here, Clive, since 1971, the dollar has lost 99% of its value versus gold. So I don't see any stability there. And then if you go from the beginning of this century, 2000, from 2000. It's lost 91. So there you go.
Well, you'll see the same kind of picture if you turn the government debt levels upside down and compare it with the dollar. So, there was a time when the government debt was well below a trillion, and it wasn't too long ago, and now we're at 31, 32 trillion. Again, it's what we're seeing in terms of the dollar, of the gold price going up. Gold is actually still playing catch up with the rise in government debt over the last 40 years, 50 years.
Yeah, I'm just going to play something that's a bit quite funny here. Someone put this on X. See if you like it, Clive.
Keep in mind that the Federal Reserve's mission is clear: increase globalism, widen the wealth gap, and quietly destroy the middle class. Since hijacking the country in 1913, we've wiped out over 99% of the dollar's value. We keep inflation just high enough to rob you, but not high enough for you to riot. Our highest priority is to make sure Donald Trump never fixes what we broke. The truth is, the man can't be bought, and we hate him even more than we hate the rest of you. Hail Hydra.
That is funny, and it's amazing what you could do with the new and latest artificial intelligence. I'm sure there's people out there hijacking your voice or my voice somewhere.
Oh, they are, and it's difficult to stop it. I mean, I agree with most of what he said there. I'm not sure whether Trump would be able to fix it, like he said. But yeah, you probably know. Do you know the rule of 72, Clive? It's an easy way to work out how an investment works. Will pay out. Apparently, if you take, let's say, if you invest in a company or in a stock and it goes up 5%. A year, you take 72 and you divide it by 5. It tells you the number of years it takes for it to double in value. So they keep going on about 2% CPI is good, but if you do that rule, 72 divided by 2, you get 36 years. So every 36 years, CPI doubles, which means that your purchasing power halves. So that's how they get you, Clive. And yeah.
I'm not sure I'd say that the consumer price index is really 2%. Certainly not when I look at the way prices of things like insurance costs are rising, land cost is rising. I mean, of course, if you're buying stuff in the supermarket, they're getting more and more efficiencies due to artificial intelligence and robotization. But at the end of the day, the stuff you want to buy in your old age, like healthcare or a nice home or paying for your grandchildren's education, all of that's getting, or your medical costs, all of that is getting expensive and more expensive at a faster pace than the official inflation rate.
Just before we move over to your Poseidon story, I just wanted to show you this and the viewers. France pushes for joint debt to bolster international role of euro. So I guess what France wants is there to be a single euro government debt. I don't think that will happen right now. Of course, each country that is in the euro has its own separate government debt market. The most important one, of course, Clive, is the German one. It's the benchmark. I don't think euro is any competition for gold. We've seen recently that gold has taken over the euro in terms of how much central banks hold as a percentage of reserves. So, Clive, do you think the euro is going to be the next major reserve currency?
Well, not. I mean, it might increase its importance, but I think the reality here is that the gold price in almost every every currency is, as near as makes no difference, close to the all-time high, which means that all of these currencies are as near as makes no difference to the all-time low. And I don't think that's going to change. I think all currencies relative to gold and relative to hard assets like property and other things the currencies will continue to reduce in buying power. So I mean, maybe you have no choice as a central bank to have some dollars and have some euros, but, and I think maybe I would, if I was a central bank now, I'd be diversifying more away from the dollar. So yes, I probably would have euros, but I don't think I'd go to the euro as my main currency. I think I'd be heading in the direction of gold. And that's what I think central banks should be doing in the environment we're in now.
Agreed. So let's move to Poseidon, this story. So you can tell us about it, Clive. Is it a fictional story? Is it a true story? Anyway, I'll let you.
So this is an absolutely true story, and it goes all the way back to 1969 and 1970 when I was a boy, and first heard the name Poseidon in I think it was 1970 from my grandfather, when I was in the hospital, or my mother took me to the hospital to see him, and he had this exercise book in which he had all his shares, and it was full of numbers, share prices, and so forth. And he had one page per day with his different shares. Now, I don't think he had any Poseidon shares, but he was talking about it because he was very excited about this company called Poseidon because it was in all the newspapers. And why was it in the newspapers? Because of its amazing rise in share price. Poseidon shares, which had been about 3 cents, were rising and rising and rising. And why were they rising? Because this company had found a mountain made of solid nickel. And it wasn't quite solid nickel. It actually was about 3 or 4% solid nickel, but it was as good as solid nickel as far as the world was concerned. And this mountain was called Mount Windara in Australia. And what had basically happened, the shares had been trading about 3 cents, but then a financier had come into this company because the company, like many prospecting companies, needed more cash. And a financier came in. His name was Sheer Law, for what it's worth. And he put some money into the company. The shares on the back of that went from 3 cents to 80 cents because now it could survive for a little bit longer. But with that money, he employed a firm of geologists called Burrell and Co. to go and see if there was anything worth having on the land. And lo and behold, Burrell did find that there was this, effectively, a mountain of nickel. Now, before this news was made public, a whole bunch of people who were on the inside started buying the shares, and the shares literally within days doubled from 80 cents to $1.60, $1.70. And then this is in September 1969. On the 26th of September 1969, or 29th of September, Poseidon announced the news of the nickel find, and that created an absolute frenzy of buying. Now, I'll just explain why. Nickel was in short supply then because the biggest miner of nickel, which was in Canada, was now on strike. And the USA was in the 15th year of the Vietnam War, and nickel was very important for their weapons, and it was consuming a huge amount of nickel. So there was a great shortage of nickel. So nickel was at an all-time high, and it's a bit like when the oil prices are high, people look for oil drilling companies. But here, companies were coming out which were looking for nickel, and they'd found this mountain of nickel. So this frenzy of buying on the day of the announcement drove the shares from $1.50 to $5.50. The next day they were $7, and a few days later, on the 1st of October, the company made a more detailed announcement, and the shares soared to $12.30 on that day, $17 the next day. This was going absolutely crazy. And of course, it was starting to make the newspapers, and as the news spread around and got reported by the newspapers, everybody who read this story in the newspapers thought they were the first to see it, and they were going to get rich on the back of this company which had found this absolutely immense amount of nickel. So by the middle of November, the shares were up to $50, and by December they were at $100. And then the company held its annual general meeting. That was on December the 19th. The shares were trading just below $100. I don't know, and nobody knows for sure what was actually said or whispered in that general meeting. But on the very day of the annual general meeting of the company, the shares leapt 30% on the day from just below 100 to $130. And the next day, they rose another 40% up to $175. And of course, this story was in the UK papers as much as the Australian newspapers. And there were all kinds of stories about people who'd made a lot of money. And I managed to dig through the newspaper records, and I found a story about a girl who worked as a shop assistant in Harrods, and she had made something like 400,000 Australian dollars by buying, because she'd bought the shares a year or two before at the low price, and now she was boasting to the press that she was giving up her job, and she was an Australian, by the way, and she was going to go back to live in Australia because she didn't need to work anymore.
Yeah, I see here, Clive, sorry to interrupt you, that it reached 278 on the 13th of February 1970. And then, of course, it went back towards, even here, though, it was still way above, what it was, like the 3 cents. So what do you think, or add whatever you want to add, but also tell us what you think the moral of the story is, and whether you're trying to tell us that this could be happening soon, maybe in the mining sector, vis-a-vis silver or even gold?
So the price you see there at the peak of $280, give or take, was the peak. And the shares then started to decline. And a few years after that, Poseidon was put into liquidation, and that would be in the mid 70s. It went into liquidation, and that mine, the Windara nickel mine, is still to this day defunct. It's silent. There's nobody there. It's just rotting equipment. So the moral of the story is, do not rush in at the last minute. So when I heard about this from my grandfather, of course, this was in 1970 as the share price approached the peak. Now, I've got no evidence that my grandfather ever bought any shares. I don't think he did. I've got no, but there's nothing. I will never know that. If he did buy any, he kept very stum about it. Didn't say anything. But the moral here is, when there's a huge speculation on something, don't be the last man in. Leave it. And if you want to find something which is exciting, try and be truly alone. You want to be right at the beginning when you hear about something, and not at the end. And what was happening, people were reading these stories in the newspaper thinking, wow, I found a really exciting story. They're buying these shares at hundreds of dollars, shares which had been only 30 cents a year or two ago, a year or two before. So really, if you do have a story, especially if it's a company which has never made any money, which was the case at this case, you're probably you're probably late in the day if you hear about it from someone else. If you're the first to discover it, as were the geologists, Burrell and Co. in Australia, and I don't know, obviously they're rumored to have been whispering to all their friends and family. If you hear about it firsthand, then you're ahead of the curve, but you don't want to be the last one in. That's my message.
Yeah, and it's interesting that they actually never got any nickel out of the ground, Clive.
Yeah, I mean, there were lots of companies around, which, I mean, as the share price of Poseidon soared, companies started to pop up like mushrooms in the night, all looking for nickel. As an example, there was a company called Tasminex. Their shares, which were $2.80, someone started a rumor that they found some nickel. It went to $16.80 within 2 days. Then the chairman made some sort of announcement. It was like an interview with the chairman, and they went to $96, from $2.80 to $96 in 3 days. There was another one which was called Samin. Their shares floated on the stock exchange at 50 cents, and on the same day went up to $30.
Yeah, it goes to show as well, Clive. We've seen stories in the last few years, and they're usually pushed by crypto people who say that there's loads of gold in the planet, in the crust. There's a story about Zaire, but you can see how the viewers can see how hard it is to actually get the stuff out of the ground, and doesn't mean just because the geologists have found something that it's going to materialize. And it's another lesson, Clive, for the junior miners. And yes, some of them will find huge reserves, and it will work out, but a lot of them also might fail. I'll leave it at that.
So I have a little bit of advice for anybody who doesn't know, and a lot of people can't do the maths on these companies. You don't have to do the maths anymore. You can compete with the professionals simply by asking artificial intelligence. So all you do is pick the company you're interested in. Let's say it's a gold mining company, and you say to artificial intelligence, and the one I recommend you try is Grok. I've got no connection. That's Elon Musk's AI, but it's good because it's right up to date. You just basically say, what are the prospects for this company? Give the details, and it will give you a nice long report. You can ask, you can be quite specific. Say, is this a good buy or not? And it will tell you.
Yeah. I'm going to be a little bit of a devil's advocate, Clive, about AI. I just read something recently that said that they've done experiments at MIT, and a lot of people who use AI to do their research and write things, they forget about it like very quickly, and you have to be careful, I think, because apparently your brain doesn't work as much if you just use AI. I'm not, but I agree with you. You can find good information on AI. What do you think about my point of view there, Clive?
Well, of course, I'm seeing that with my own son, who's now 8 years old. The picture you're probably looking at was probably when he was three. And, if I ask him to go and do a complex problem, like write a computer program or something like that, I know that I'm not looking over his shoulder. He's not going to type anything on the computer. He's going to speak to the computer, and he's going to be speaking to an AI tool such as Claude AI, and he'll say, "Write me a program to play Space Invaders," or "Write me a pocket calculator in Python," and the machine is going to do all the work, not him. And so, I think that's the way the world going. People will become lazier, and they will use their brains less. And yes, I think so. This study by MIT saying that it reduces our ability to think or
Remember,
remember. Yeah, I think that's going to be a real experience going forwards, and I think it's a danger for the world. And of course, we have now some pretty smart cookies who've been around in the AI business for a long, long time, saying AI is already outsmarting us, and it's only a question of time before AI becomes our master.
yeah, yeah, AI and the globalists. Anyway, Clive, hopefully you get your camera sorted, and I want to wish you and the viewers a great weekend. Enjoy the weather if you're in the UK. It's not something we get very often.
Thank you very much, and thumbs up to all your viewers, and thanks for all the nice comments.